Stocks above the 20-period moving average have just pushed back below 63% to now be below 60%. Let's take a look at the details. This brings me to the question, obviously I'm a little bit biased to the bear side, but has the fun just started and do we need a safe word? So we're going to look at the break back in as opposed to the breakouts. We're going to look at the 63% and why 45% might matter next. And we're going to look at what we did yesterday on the premium popper setups. So the indexes have now finally joined Uncle Dow. We've seen price tipping over. New all-time high rejected on the Russell, the S&P, and price swing high, not necessarily new all-time high, but that price swing high after that, huge rally up, immediately rejected. There's no apologies being issued. The Dow is not expected to expect one, but nonetheless, everyone's joining the party. Clues from yesterday were the VIX. We did note that the VIX yesterday was elevated, and at the time we were looking at a pre-market rally. We were up about 20 points to the pre-market as I was recording. And again, we did see that gap higher on yesterday's VIX and the subsequent rally high. And we're seeing the same again. Everything seems to be in sync now. We've got the VIX gapping high, pushing high. We've got overnight trends. We're already off about 40 or so points as I'm recording this. Just about 1-2 hours prior to the market open. But nonetheless, everything seems to be doing what it's supposed to be doing. And again, are we starting to see the first sign or the first push of that elusive 10% in 10 days, which we usually see once a year, but we didn't see it last year? So one of the several things that I looked at in yesterday's group call was actually that prior new all-time high. And again, when we were looking at this, and just what's allowed me to take a little trade pre-market, it's about 1-2 hours, about an hour before the market actually officially opens, but we saw that big sell-off during the main session, or the eventual sell-off in the main session, the overnight retracement, and we did see that rejection, and basically it's a break back into a prior range or prior range area again. We can see the whole range there on the dailies, but this whole area is essentially consolidation. So some people might phrase this as a false breakout. I think price breaking back in is a more accurate description. It's not a false breakout, it's just it's not ready to carry on going higher. Now, you won't see a break in to a consolidation ever really spoken on. I had it explained to me on the back of a napkin in a service station with an old hedge fund manager I used to meet up with every now and again, and she explained it to me. Yeah, and this was back in the 90s, and she was a career fund manager. She was one of the first female floor traders at the time through the 80s. So she was very knowledgeable, and this is just one of the things that she explained to me, and I've never forgotten it, just because it was quite literally on the back of a napkin. You couldn't write it, but nonetheless, you've got again think about it like it's a flip from price support now becoming resistance. Probably a more descriptive way of saying the same thing. Anyway, similar to a breakout, price pushes back in, and we can see that clear rejection for that push higher, and it's on that rejection that we can start saying that, okay, well, the price, the swing high, it's been reclaimed essentially, and that ultimately allows me to place the trade. Now, what I did differently this time, rather than place the trade on futures, because I like to trade the cash markets, European style options on SPX, because we've got some changes in the last couple of weeks, we can now trade SPX cash settle options using the global trading hours. There's no data, there's not great data from a charting point of view yet, so I'm just taking my lead off the futures. When there's the occasional trade settle, that's what I'm going to trade into. Just flipping over to the sentiment. Sentiment is forming, basically what this is a chart that basically says the number of stocks that are above, in this case, the 20-period moving average on the S&P 500. So of the 500 stocks, 63% of them have been above the 20-period moving average, and we saw that drop yesterday. So we've got that whole market participation. An example of whole market participation, I spoke about this earlier this week and last week actually, but you have this monumental crash upwards situation on the indexes. And we have that whole market participation, the number of stocks that participated, 83% of them rallied sufficiently enough to be above the 20-period moving average. But what we saw after that was kind of 50-50 market participation, and yet the market has continued to go up. So the index is being carried upwards on a very small number of stocks. There's been no market participation on the bull side for a long time. So me personally, I'm waiting for that bear market movement. So the real question for me is, are we going to get the 10% in 10 to 15 days, which we normally see about once a year, usually February, March, or September, October time? They're the seasons, and for that cyclical nature of the market, just that little reset button being pressed. Or is it just going to be, around about 5%, which is what we've seen for about the last 18 months? Anyway, questions, lots of them. But when we got a big move is the one on my mind. I've prepared for it. I'm already bearish. We can still profit on the short-term movements as well. Again, the premium poppers are setting up, they're pulling out the premiums. As I just mentioned, my first trade was taken in the pre-market on the futures rejecting, and the corresponding level on the cash was around, my short strike was at the money at the time, at that 77.85 level. So I managed to scoop that as the market rallied 20 or so points. We saw the sell-off and it came back to around about the Friday's close for the open. So it just gave me a little bit of a head start on the day to get myself positioned. Next setups are pretty standard stuff. We got the first breakout, we got the second breakout, the software highlights. We had good quality scores for both of them, and a little bit of sideways grind, and then eventually we just tipped over. For me personally, I was by lunchtime, essentially, I was out enjoying a little bit of food. Because I'm based in the UK, it's my evening time, so a little bit of sushi, went and watched Spider-Man, and it was, again, just plain sailing. There's nothing to do other than wait, and the markets certainly paid for that patience. Again, Spider-Man, it was excellent, but if you haven't seen it yet, it's not worth waiting through the final credits for that piss-poor tease of what's coming next. So C- Marvel, must try harder, please see teacher, you can do better. Anyway, Bingley Bong, targets reached as we headed into the movie for what turned out to be a nice day's trading. And of course, the community at large smashed it again. Well done, Team Anti-Investor. Chris, Richard, James, again, just on the highlights, the wall of wins there. So here's a fun fact. Home Depot, it reports before the opening bell today, so here's a fun little fact. Home Depot once faked its own inventory. When the first two stores opened in Atlanta on the 22nd of June 1979, the founders could not afford enough stock. So merchandiser Pat Farrer persuaded suppliers to hand over empty boxes carrying their labels, and the team stacked them high to make the aisles look full. And the shelves were full, but the boxes weren't. So the company went public in 1981 and raised just over $4 million. You've got to remember the time, that was a lot of money in 1979. That was when $1 million was worth $1 million. Anyway, I am not smarter than the data. The VIX told us yesterday, before the move happened, it was extremely elevated. Once again, disparity with the S&P, once again, just giving us a clue that something weird was going to happen. We're seeing this a lot at the moment, and we typically see this a lot around market tops where there's that disjointed disparity between the main stock indexes. So I try not to be smarter than data. I do fail from time to time, but it means that I want to engage the brain less, sit it out, go for some sushi, and I can get more gain. So if you want to learn more about the morning income or how to collect weekly income using the systems that I talk about, head over to antivestor.com or click the link in the description and I'll see you over there. And as usual, I'll just leave you with a meme of the day. And may your trades be smoother than a cashmere cotton.